Good morning. Happy Friday, guys. Sarah here, CEO of Biz Credit Builds. Welcome to Bank on Women, each and every Friday, EST on the She Is Still Dope Network. I appreciate you guys. I literally am excited for this week's episode. I'm going to be dropping lots of jewels. So as usual, please go get a piece of paper and a pen because I definitely want to get into some great stuff. For the month of July, I am going to have some special guests that I'm going to be announcing throughout the week. Hey, Tam! Tam is one of my business besties, and I love her. She's my Texas family. But no, definitely want to talk about today how to finance a vehicle in your business name. And I'm going to be dropping some jewels. Of course, I am the financing guru, so I'm going to be sharing with you things that are going to be required and things that you should look out for. I think most people, when they are getting a vehicle in their business name, they personally guarantee it. So I'm going to show you today how not to personally guarantee it, what the requirements are on the back end from the lending institution or the team that you're working with, and what things you need to prepare yourself ahead of time once you get to the dealership. There also, I'm going to share with you a list of dealerships that are small business friendly. So I am excited to be here with you guys today. Some other things that I wanted to announce. I am going to be having some Bank on Women merch coming soon. So look out for that. If you haven't already joined my business credit group, please do. We're going to focus again. The main focus is for you to be prepared, right? You want to walk into this dealership to get a commercial vehicle or even a commercial lease that is beneficial on the tax side to you as a small business. So again, I'm excited. If you haven't already shared this chat to other people or this link, please do so. Also, please join the She Is Still Dope Network. Like when I say we are a group of dynamic women from all different backgrounds, all different nationalities, we're all over the world. Please join the She Is Still Dope Network.com. Like literally, we have so many. When I say, if you listen to the messages, and I mean, not only Bank on Women, there are several programs throughout the week that just pour into you. I was able to catch, I'm always so busy, but I was able to catch two this week. Also, join your local chapters. I have made a commitment for August to do something with my local chapter here. So please join your local chapters. There's local chapters where people meet locally, but like when I'm saying, if you haven't still joined She Is Still Dope, please visit sheisstilldope.com. Join the network of women doing different things. We're international, so there's groups all over the world. But when I say they are doing some amazing things, and the content and the messages and the jewels that are dropped on a regular basis are literally, it's an amazing blessing. But yeah, please visit sheisstilldope.com. They got you. Okay, so as usual, when I go into sharing content, I always start off with no perfect people allowed, right? I think that we oftentimes missteps when we're building business credit. Over the past few weeks, I've gone over a business credibility checklist, a business checklist, things that you need to know. You can always catch a recap of my other episodes on Roku, YouTube TV, a host of other TV networks, but like literally I need you guys to understand that when you are in the middle of building business credit, you need not to miss steps, because the minute that you miss steps, then what happens is that you get denials, and then we have to clean those up. And I think the next episode, I'm going to share how to clean up your business credit report, because it's possible. Just like they have regular business credit repair, they have business credit repair, and you can do that yourself. So I'm going to share some letters and things of that nature. But today we are talking about how to finance a vehicle in your business name and things that you need as a business owner. So things to consider when you're purchasing a vehicle for your small business. I know that finding or buying the right vehicle is never easy, especially when it's for your business and not for personal use. Now, I do know some people who don't have the best credit, so they are in the middle of building because of personal reasons. They've had to apply for bankruptcy and things of that nature. So utilizing their business to get another vehicle that is separate from their personal always helps. And there are several reasons why people get commercial vehicles, but buying the right vehicle is probably key. If you're getting a vehicle for your small business, securing a ride is what I call it, is a big ticket item, and it can benefit you in so many ways. There has been an increase in commercial car and fleet vehicles in the past few years, but it has increased to over 2 million in 2020. So when you're going to be looking for the right vehicle, I think that you should consider a host of things, and we're going to go over those things today. Like it or not, the car that you may end up with is a projection of your company and a reflection of your company. So it does matter what business vehicle you're in. I would always recommend that, get a vehicle that is brand new versus used. And there are several reasons that I recommend that. Number one is you get more of a tax benefit. Number two is that there are so many vehicle sales on the commercial side for brand new vehicles versus used vehicles. Now, when you're talking about equipment leasing, and when I say equipment, I mean like trucking, like if you have a trucking company. But most people, when they're just buying a regular vehicle, the terms kind of change. So we're going to go over both. But again, consider these things before you even go to look or decide to purchase. Vehicle affordability. Can you afford this vehicle, right? Business credit is based on how often you pay your vehicle payments, right? Your Dun and Bradstreet score is literally driven by how fast you pay your payments. Not that you pay it every month, that's great, but the more payments that you make, the higher your Dun and Bradstreet score gets. Your company's image, and then your write-offs, depreciation, tax implications. Like there are some states that give you implications if you purchase a business vehicle, and people don't know that. They always talk about, like I've seen so many memes on, you can write off your whole vehicle. Yes, you can, right? But you can only use that tax write-off one time. And although you can get mileage, depreciation, and things like some states, Maryland being one of them, carries taxes for your business vehicle, and you have to pay out of pocket for those taxes. Staying within a certain weight class of your vehicle is super important, because once you pass a certain class of vehicle, there are different requirements as far as state regulations. So that's always super, super important. We talked about vehicle affordability. One of the first considerations you need to make is if you can afford to buy and maintain this car. Maintenance, fuel costs. I know there are several influencers that I've helped get vehicles, that they get high-end vehicles. I drive a Mercedes. It's under my business name. So I needed to consider the maintenance costs, right? Because having a Mercedes, the maintenance is not like having a Toyota or a Nissan. So if your company is doing great with purchasing a vehicle won't be an issue. But if you incorporate it as a business cost, keep in mind that those extra costs are going to be associated with purchasing that vehicle, and you want to maintain that vehicle in great condition, because you can always sell it, right? Now that's an asset, right? And if you pay it off sooner than what the finance terms are, it becomes an asset. And when you go to finance a house or a commercial property, you can use that asset as collateral. So keep in mind that there are different things to consider, but considering that vehicle affordability is super, super important. Each vehicle model is different, and there are registration and insurance fees, repair, maintenance expenses to prepare for. There are several models that you can't just go to a regular mechanic, so you have to go to a specialized mechanic. According to AAA, cars that are driven over 15,000 miles a year, they average $9,000 to insure and maintain them. And that's an average vehicle. So if you're talking about a high-end vehicle, that maintenance goes up. So you need to consider that when you're talking about your budget. The benefits of buying a company vehicle are that you can account for depreciation, tax deductions, and upfront cost. I mean, there are sites like, I always look up the MSRP, which is the real value of the vehicle. As a general rule, bigger and heavier vehicles, they have higher fuel costs, maintenance costs than smaller cars. So you got to take all of those things into consideration. If you're using this as your everyday car, consider the gas, right? You're probably going to need a business gas card. I always say, like, for my business vehicle, I pay my payment, I use a business gas card. I mean, that way I could separate that from my regular vehicle costs and expenses. So to me, it's a decision that you definitely have to consider and think about. Remembering your company's image. Like, most people don't consider or even think about some of the things that happen. But once you set a budget and get the tax implications out of the way, it's time to choose a vehicle, and the type of business that you're in will decide what kind of vehicle you need to buy. So do you need a non-descriptive vehicle that files under the radar, or do you need a fancy ride to impress your high-end clients? I pulled some statistics for the influence of your vehicle's company image, and literally it's crazy that 75% of the company vehicles that are purchased that are not fleet, they have an impact, and clients use them for brand awareness. So that was alarming to me, because I pull stats all the time, but having brand awareness is directly relevant with making money. So if you're in the business of taking a client to lunch or meeting a client for lunch, or literally your realtor, your client sometimes drives with you to appointments. To me, sometimes I take, right now because of COVID, if I settle, we're usually settling at my office in a conference room, and afterwards I always take my clients out to eat, so just to celebrate, like a lunch or something. So sometimes I'm like, hey, let's take our company vehicle. But I mean, I never knew that 75% of the vehicles that are purchased under a business or corporate name are used for brand awareness. So that was super alarming to me. But cool fact, right? And most people do not. I didn't, I know when I purchased my vehicle, I didn't purchase it for brand awareness, but it influences your company's image. So it may be something that you want to utilize as a reason to purchase your vehicle. Who will be using the vehicle, right? When you are buying a car that will end up also for personal use, if this is the case, you need to think about what type of vehicle it is, because it affects the amount that can be written off at your taxes. We're always looking to do the ethical things, right? And deductions are so dependent on who else uses the company car. So if you are tracking mileage, buying a staff car makes more sense because you won't have to worry about mileage limits, where if you are using it for personal use, like you have to keep a log of this was personal use and this was the mileage versus this was company use and this was the mileage. So keep that in mind. The main function of the vehicle. Are you buying a car to impress your clients and project success, or is it more for practical reasons? If your business model affects the car that you need, then you need to get an SUV, a van, a truck, or a sedan. If you are looking to do brand awareness, then maybe you need a sports car or a high-end car for personal use, right? So it all depends. But answering these three questions are super important. Vehicle ownership, who you will need to title the car. So, and this title is going to go in the business name. So if you're writing it off as a business expense, you may not get a significant advantage if you title it in your personal name. We also need to think about insurance coverage, because it costs less if the vehicle is under your business's name and your company's name versus if this was a personal vehicle. So overall, you should make sure that your small business investment makes sense for your company. But keep these three questions in mind and ask yourself, who will be using a vehicle? What's the main function of the vehicle? And consider the vehicle ownership. Like, is this going to go under my business name or is this going to go under my personal name? Number 3, take advantage of write-offs, depreciation, and tax implications. And Tamara, she helps me with my taxes, my business taxes. And sometimes we go back and forth for weeks. And one of the benefits of buying a vehicle through your business is that the tax advantages that are tied to it, right? The operational cost for every car registered to your company is deductible. So keep that in mind. In 2020, in the 2020 tax year, taxpayers were able to claim 58 cents for every business driven in the company car. However, if you use the company vehicle for personal use, you can only deduct those costs for, that are related to business use. So you need to do some, what I call calculation gymnastics. And it's so annoying. There are apps that you can use like Mile IQ and things of that nature that can automatically, when you get into your business vehicle, you can put if this is a business versus personal. But believe it or not, the most significant advantage of company vehicles are depreciation. And the new tax laws that vary by state use a car exclusively for business will substantially get you bonuses or a large tax deduction. And, if the vehicle has been serviced between a certain date, September to December, then you also get a depreciation bonus. You can expect to earn up to $18,000 in year 1, $16,000 in year 2, $9,600 in year 3, $5,700 for each year into the vehicle loses total value. So that's why I say, when they say you can claim up to the whole cost of the vehicle, I've seen these memes like you can buy a G-Wagon and you can totally write it off, that may not be in your best interest. So I definitely suggest that you talk to your tax professional, your accountant, and your financial advisor to tell you which way it's better to go. Like for me, it's not in my best interest I always pay taxes every year, a lot of taxes. So for me, it's not in my best interest to just get one big deduction. So if you're running a business and you need deductions every year because you make a lot of money, it may be in your best interest to do it year by year versus getting one lump sum of a deduction, because you can't take advantage of that deduction the next year. I mentioned talking to your accountant. Please, before searching for a new vehicle, speak to your accountant about write-offs, tax implications. It depends on your current deductions. This is definitely going to change if you're going to get a new car versus a used car, if you're going to get a loan versus financing or leasing it. Even if your company finances are stable, consider a whole bunch of things like trading your old company car. It would give you a lower reduction, while leasing, it can give you a tax advantage. If you forgo financing and you pay cash for it, it's an outright deduction. Your accountant could go more into more details in concerns to, and I'm going to have my accountant on because he is the bomb at this, but you literally, there are tips and tricks that they need to advise you on, because, and you should really be meeting with your accountant on a quarterly basis or your financial advisor, because a big purchase like this could literally put you in a totally different tax bracket, deductions and savings wise. So I definitely would yield you to consider these things before buying. Now, keep in mind that the interest that you pay on your car loan is a deductible tax expense. But something to think about between a used car and a vehicle is that dealerships have lots of deals, rebates, and incentives for brand new cars. That's why I always say, if you're going to go hard, but like it totally depends on your choice. Now, I mentioned to you earlier about, the IRS websites and the memes that are going around. So there is a section in the IRS bylaws, section 179, that just says that you're eligible for a deduction up to $25,000 if you use heavy pickup, van, or SUVs for business 50% of the time. So please note that this is a deduction that can only be applicable the first year that you use the vehicle if it meets specific IRS specifications. You can also claim a first year depreciation bonus if your heavy vehicle is brand new when you start using it for business. There are also restrictions. So your deduction can't be more than your yearly totable net taxable income. So you can't, if your yearly net taxable income as a business, not personal, is $300,000, and you can't deduct. I don't care if you have a fleet of vehicles, you can't deduct that, right? And you also need to continue using the vehicle 50% of the time after the first 5 years of service to avoid paying back some tax deduction. So what I found one of my clients did is they used it and then they stopped using it 50% of the time, right? And then they had to pay back a percentage of that tax deduction because they audited them. So while heavy vehicles can provide, tax benefits that can aid your business, they can also hurt your business taxes. So just keep that in mind. So when you are getting a business loan, right? There are several types of vehicle business loans that they give you. And I think what most of the people leave out are, the main requirements. So I think that, considering leasing versus buying is a conversation that you should definitely consider. Most people do not want to lease. They always want to purchase. And for me, it all depends on how much you drive your vehicle. If you drive your vehicle a whole lot, then I think a purchase would be, it would make the most sense. But if you are purchasing, if you drive super less, like, or not a whole lot, like I know my Mercedes, I don't drive a whole lot. I may drive like literally 7 to 10,000 miles a year. So for me, although I purchased mine outright, I still get deductions on that because I don't use it the way that I'm supposed to. But that would be a good instance that you would lease because you don't put a lot of mileage on your car. And then looking at the APR is super important because your interest rate, right? We're not so pressed to have a seat at the table that you take anything. So going into the dealership, asking them that ahead of time, what do I qualify for? Because you don't want to apply for something and you don't qualify, or they give you a super high interest rate because you don't have enough credit or enough business credit. So let's go over some things that you're going to need. So the first thing is, of course, you're going to have established business credit. You should have an EIN already, which is with the IRS website. You should have a Dun & Bradstreet profile. You're going to need to have at least 3 to 12 trade lines reporting from vendors that you are making monthly payments to. You're going to need to literally build your business credit, right? So paying your bills early, making on-time payments will affect your Dun & Bradstreet Paydex score. Avoid using too much credit, limit your use to 20 to 30%, and pay your bills sooner than what they're due. Excuse me. Cleaning up your public records. Like if you had a bankruptcy or if you had a judgment or a lien against your business, that'll lower your credit score. So you definitely want to make sure that all of that is taken care of before you apply for anything on the business side. Checking your business credit scores, right? 2 weeks ago, we talked about contacting your business credit bureau and pulling your Experian business credit report, your Equifax credit report, and your Dun & Bradstreet report to get a real business credit score. I'm not talking about a NAV credit score because NAV is great to pull. They're like the Credit Karma of business credit, but you need to pull your real score, right? So my recommendation is that you go to the Experian website. Your general credit report costs around $36 to $50. For an Equifax credit report, it's going to be about $100. And for your real Dun & Bradstreet report, it's going to be about $61. Keep in mind that, these are investments into your credit. So you should be pulling these on a quarterly basis anyways. NAV, again, gives you access to all 3 scores, but it's not a real credit report. So you should be monitoring these on your own anyways. If you haven't already created profiles with Experian Business, Equifax Business, and Dun & Bradstreet, you should have separate profiles and should be stocking them or putting alerts so that when a change is made to your business credit report that you're aware of it. A score over 80 for your Paydex is generally a great score. And once you have that, then you should be good to qualify for a general business car loan. Now, that's not all that you're going to need, but that's one of the requirements. If your business credit is weak, I would always consider leasing it in your company's name and doing a short-term lease and then buying it. But again, it all depends on your credit. Now, keep in mind that if you're not personally guaranteeing this loan, then you need to make them aware of that. Like, I want to buy this solely in my business name, but they are going to pull your personal credit to see what you are doing on the personal side. No one is going to give you an $80,000 car, a $40,000 car, even a $20,000 car without looking at your personal history, even though they're not putting it, or you're not personally guaranteeing it on your personal side, you're doing it on the business side. They want to see what you are doing on the personal. If you have a bankruptcy, it's most likely that they won't, accept you. It's what it is. If you have a whole bunch of delinquencies and a whole bunch of personal debt that is delinquent, it's very common that they won't accept you either. Now, there are some dealerships that will consider you, but they're going to give you a higher interest rate. So it all depends. Now, we talked about choosing the right vehicle, but because it definitely makes a difference when you're going through financing, and they consider that. Lenders also want to see your financial information before they extend the loan. So they're going to want to see your business balance sheets or financial records. I know most of the creditors or lenders that I utilize wants 3 months latest bank statements, and they want to see that cash flow. So cash flow is key. What you're depositing into your accounts, because that's what shows them that you have that you're able to pay. You can also expect, again, for a lender to pull your personal credit history as well. For this reason, you can, again, ahead of time right now, most credit bureaus are giving free reports. So you can get a free report and dispute those errors before you even apply. So on top of the 3 months bank statements and your business credit, they're going to want to see a balance sheet, and they're also going to want you to list your assets if you have any. So if you own anything in your business name, they're going to want to know that. So you can shop around at local banks and credit unions, but it's always best to, for me, instead of you going to the dealership and a whole bunch of people pulling your business credit, if you have a local credit union, I would go through them, because the requirements, you already have an established relationship with them, or even a banking institution, and they will cut you a check to give to the business dealership. It's important that you compare interest rate and terms, right? You shouldn't assume that the dealership is going to give you the best deal, right? And if you are pre-approved and you apply ahead of time and all of these things are done, then guess what? You can better negotiate your terms as far as pricing for the loan. If your business credit might not be strong enough to get the loan in only your business name, some lenders will require you to sign a guarantee. What does that mean? It means that you are personally responsible for the loan, and if your business stops making payments, then it will go on your personal and your business credit. So I would always think carefully before doing this. There are lenders out there that require no personal guarantee. So we want to go with those lenders. Always remember to use your business bank account when making payments on the car. If you make payments using your personal account, it would look you're commingling funds. So it doesn't look very nice. I also recommend that you obtain a business gas card or a business fleet card. Like, you want to separate your business gas expenses versus your personal. So it's always super important. Get a quote for your insurance. I had someone the other day who got a business vehicle, and then when they went to quote the insurance, they were like, oh my God, I didn't know it was going to be so expensive. So you got to remember that your insurance costs are going to change based on your driving history, right? Also, they're going to change based on how much you're using your vehicle for part-time for business versus full-time for business. If there are other employees that are going to be driving this vehicle. So please, I would definitely look into commercial auto insurance. If you're using your car part-time for business, then you can always call your personal insurance company and let them know that, and they will give you a quote. But I would definitely quote it out before you make the commitment of taking a vehicle, because you want to know, again, you want to upfront know all of these costs versus these costs being a surprise for you. When registering your vehicle in your business's name, there are different requirements that are required via the state. You're going to need to provide copies of your articles of organization or incorporation to the DMV. And you're also going to send a member or a manager of your business to register the car, not an employee. That member will need to show their driver's license. They will need to pay for all the registration fees using your business bank account. Do not cut a personal check. And then keep in mind that you're going to need to keep mileage journey information. So remember what I was saying, a journal, maybe an app. I know all of my employees have an app on their phone. If they're using a business vehicle for anything that can automatically track it. But you would definitely need to note that. I know that QuickBooks has an app also, but you definitely need to do all of those things. I think that what people don't always talk about is the overall cost. They're just so excited to get into a business vehicle that they forget about those things, but we definitely need to consider those things, right? So back to business documents. You know, many banks have seizing requirements for small business loans, which means that you can only finance a car if your firm has a business that's been in business for 2 years. You're going to need to provide your lender with at least 2 years of business tax returns and cash flow statements. You will need to have positive cash flow to get into a loan. Now, what does that mean exactly, right? So they're looking at your deposit history. So if you have an accountant can do those for you, or you can probably do them yourself. Depending on the size of the loan, the lender may also ask for a business plan with details on what you plan to use this vehicle for. If you make a down payment on a car, then you will need to provide proof of funds, such as business bank statements. Now, you must also provide your lender with documents that establish that you are, that basically state your ownership stake. So if you are purchasing on behalf of a partnership, you need to have at least 51% ownership stake. For a corporation, you must provide the lender with articles of incorporation that basically say that you have a certain percentage of stake in the company. If you are an LLC that's a sole proprietor, that's a sole member, then you need to provide them proof saying that you have 100% ownership stake. For other business entities, you may provide or turn in a full partnership agreement or a limited liability company documents, a business license. In some states, such as Kansas, you can start a sole proprietorship without registering with the state, but that's not in most other states. So in such instances, you can provide the lender with your personal information for your business name and just put that you use it for work. But in most states, you're going to need your EIN and those incorporation documents, and then something stating the amount or percentage of ownership stake that you have in that business. Additionally, you must give the lender your EIN or your tax ID, and you are not putting your personal social security number on there because you want this to be in your business name. Now, keep in mind that you know, if you personally guarantee the loan, you're going to be personal responsible. So keep that in mind. I would definitely do the following things to prepare for applying for the loan. So the first thing is to focus on your credit, right? Your business credit and your personal. Although we're not using your personal, the business credit is going to be most important. And you definitely, they're going to pull both, but you definitely want to focus on establishing business credit if you don't already have it. Establishing a profitable business, right? To be considered a stable and profitable business, the lender wants to see that your company has financial records. They want to see your business bank statements. They want to essentially see that you have cash flow, because lenders evaluate risk by assessing the likelihood that borrowers will default. You have to do your part in proving to them that, that you are a good candidate and that you qualify ahead of time. So you'll have the best chances of securing a business credit loan if you demonstrate that your business is making money, and using projection statements will likely, show to them that you are not going to go out of business anytime in the near future. So it's just important that you do that ahead of time. Getting a copy of your business credit reports and your personal reports. Then you want to essentially, whatever lender you're using or your accountant, you want to sit down with them and prepare what I call a loan proposal. It should detail essentially how much of a down payment you can afford, if you're going to be using this purchase for business half time, 50% of the time versus all the time. And then you need to consider the cost for maintenance, insurance, and all of those things. That's, to me, is a proposal. I need you to compare loans and rate terms, right? Because every lender is different, right? What rate you may get with someone that you have a relationship versus someone that is taking a risk on you is going to be totally different. The providing proper documentation. They want to know that you have been in business at least 2 years. I know one lender, Alley, who will take you if you only have 1 year. But again, it's Alley Finance, so their interest rate is going to be crazy high. So it all depends on what lender you use. But 2 years in business, 2 years personal or business tax returns, documentation showing your percentage of stake in the business and your EIN number, business expense reports, or 3 months of business bank statements prior to your loan application. And then, of course, you're going to need your personal date of birth, your social, your proof of income, and your personal bank statements as well. Keep in mind that you are letting them know ahead of time, I do not want to personally guarantee this loan. I want this to be a business loan. I do not want to personally guarantee it, and they will take that into consideration. And then it's that easy. Once they approve you, then you definitely want to consider the type of vehicle, how much you're looking to spend, and then those things. Keep in mind that if it's less than 2 years, they're going to make you personally guarantee the loan. If you've been in business more than 2 years, then they're going to PG the loan without looking at your personal credit. Now, if you are doing it on the business side and you've been in business for 2 years, they're going to be looking for you to have a paydex score of at least 80. So that's that Dun & Bradstreet paydex score. And then they're going to look for you to have 2 years of taxes, 3 months of bank statements. So I know that was a whole lot of information to take in. But I think ultimately purchasing a business vehicle right now in this day and age is super easy overall if you're operating like a real business, right? Because if you're operating like a real business, then these are things that you most likely already have, right? And if you don't have these things, then I've given you a list of things for you to prepare for. So ultimately, the hope is that what you took from this conversation today is that we have some to-dos if you're not already there, but if you're already there, congratulations in advance. So some dealerships that are small business friendly. Here we go. CarMax, they will take you real quick. Hyundai, they will take you real quick. Nissan, they will take you real quick. And lastly, Ford, they love small business. They are very lenient. The requirements for them are next to none. So, Mercedes-Benz, they love small businesses. I've given you 5 dealerships that are all business friendly that I use on a regular basis for my clients. Their requirements I've already given you. Some of them change based on your credit profiles and your personal experience. So again, Mercedes-Benz, Ford, Nissan, Hyundai, CarMax. Right. All right, guys. Well, I think we went over enough information for today. Bank on Women, each and every Friday, 10 a.m. EST. Please tune in. Share if you haven't already joined Biz Credit Builds, the group. Please do so. Also, please visit sheisstilldope.com to join our network. There are so many women doing dope things here. Please support. Literally, they have local chapters. They have different programming throughout the week that you'll definitely enjoy. It was a pleasure pouring into you guys, and I'll see you next week. Bye, guys.